In fact, on that note, let's welcome on board the first guest on the show. We have with us Mr. Ashish Kehair, the MD and CEO at Nuvama Wealth, joining us. Ashish, hi, good afternoon. Thank you so much for making time and speaking with us. Well, your conference regarding the emerging ideas is doing quite a bit of rounds, getting rave reviews. Talk to us about what's the entire intent with this emerging ideas conference, because that's the case, right? The street is hunting for fresh ideas.
Yeah, I think after COVID, this is the first one which we are doing with this customer segment. The theme or the focus for us this time around is around capex, credit cycle, and consumption. And all three are seeing very decent uptrend. Capex, actually, if you see over the last 2 3 years, this is the first time we are hearing large corporates and mid corporates talking about increasing capacity, and after about 10 15 years their balance sheets are deleveraged. The banks are in a much better position to lend. In fact, their credit situation is also very nice, and we are seeing unprecedented credit growth happening. And consumption, I think, is a secular trend any which ways, given the demographics of India. So the conference is around combination of these three and the companies which are going to benefit out of these three.
Oh, well, absolutely. And in terms of the interest, which are the companies that are seeing a lot of interest from the investors? And if you can talk to us about your top bets in terms of which sectors do you think will likely outperform? What's the sense that you're getting?
So, see, from a valuation perspective, actually, things are appearing stretched right now. So, obviously, in the next few months, you could see some cooling off. But sectorally, where we are seeing demand coming is, let's say, defense sector, private sector banks, insurance companies, or quality franchises. Where deleveraging has happened and positive cash flow is happening. Where we are not so bullish is maybe leverage metal bets or expensive cyclicals. I mean, these are areas where I think concerns may happen. But otherwise, areas where balance sheets are deleveraged and there is growth coming in, especially related to the three sectors which we are talking about, I think we are extremely bullish.
Okay, extremely bullish as far as the themes of capex as well as banking names, etc. is concerned. But how would you fare the Indian valuations and the sort of outperformance that we have seen this year coming in from India? Do you expect that to continue in 2023 as well? Because now there are increased murmurs of outflows happening from India and probably headed towards China.
So if you just look at it from a relative valuation perspective, what you're saying is absolutely right. But you need to look at it in the context, right? Most of the other emerging markets against which we are appearing at a premium, they've not had the kind of earning support which we've had. So our view is that this premium has occurred more from their underperformance rather than our outperformance. That said, any time in the market when the divergence increases so much, there is some law of averages which operate. So we need to be mindful of that fact. But structurally, from a 4 5 year perspective, I think India is in a very very good place because there is earning support. Inflation is moderating. I think in US also you are seeing now some good commentary coming in. So a combination of both, I think FY23 should continue. India should continue to outperform. Yes, others will have a catch up. If the global inflation momentum goes down, commodity prices goes down, there will be a catch up. But I don't think India will fall in a hurry, given the earning support which we have.
Okay, so India is not falling in a hurry given the earning support that we have. That's the word coming in, Ashish. But one space which seems to be falling and earning pace at least seems to be downgrading a tad bit is the IT counters, right? And you talked about the headwinds that we are seeing in US, etc. In terms of the house view coming in for the entire IT sector, is it a bit of bearish call there?
So we are not bearish. However, we'll not also be bullish there. We are more or less neutral. Because yes, while I think inflation and interest rates may reach to a stage very soon where it will get pivoted, but global trade flows and export-oriented sectors are seeing headwinds. I think that is the joker in the pack which everybody has to look out, because trade flows are getting affected, and that will consequently have a bearing on any industry which has a heavy export related earning. And IT is right up there.
Hmm. The other joker in the pack for the Indian markets is budget, which is impending right in the month of February. It's right around the corner. And the themes that you talked about, capex, industrials, etc., have a lot of bearing in terms of what the policy announcements are. What is your own expectation of what could be there in terms of the joker in the pack as far as budget goes? Will it be tilted towards the defense? Will it be shifted towards infrastructure?
So I think this government at least has a very, very, balanced view of both growth and inflation. And if let's say inflation directionally is going to get pivoted, I think they will invest in growth. Defense is one of the favorite sectors, and a lot of things are happening, where the global supply chains are getting disrupted, and an opportunity is emerging for India to become manufacturer both for Indian consumption and for global consumption. I mean, you're seeing that in the mobile phone segment, you're seeing that in the defense segment, you're seeing that in the aircraft segment, which were traditionally India was not a strong player in that. And I think China plus one, Europe plus one, all these themes are playing out. PLI is playing out. So multiple vectors are actually driving this, and my view is that government will capitalize on that and give a further impetus.
Oh, well, yes, we have seen a slew of PLI schemes and the headlines as well with respect to how the mobile exports can be to the new tune of $9 billion is something that also support that argument. Ashish, it was a pleasure having you on the show. Thank you so much for joining us and all the best for the conference as well.
Thank you. Thank you so much for having me here.
Okay,
Have a
moving
good day.
on then, the sidelines of the CII